Today we're looking at a company that's really fundamental to the entire semiconductor industry, ASML holding NV.
Absolutely. They're the ones making the machines that make the most advanced chips. You can't really talk about cutting-edge tech without talking about ASML.
So we've got their Q3 2025 results right here, the press release, the financials. And our goal today is to sort of unpack this interesting contrast we're seeing.
Yeah, it's like on one hand, the quarter itself looks okay, financially stable, but maybe not spectacular growth in terms of units shipped right now.
Exactly. But then you look at their technology story, the forward look and stuff, and it's incredibly bullish. So we're hunting for those, nuggets that explain this tension. What are the strategic moves happening under the surface?
Okay, so let's start with those headline numbers for Q3 2025. They reported total net sales of 7.5 billion. That's 7,516 million to be precise.
And net income came in at 2.1 billion. The gross margin, always key for them, was 51.6%.
Which is pretty solid, right? Management said these results were in line with guidance.
Right, in line. Sometimes that can mean, they hit the target, but maybe the target wasn't super aggressive for the quarter itself. If you look at the actual systems sold.
That's where you see that flatness, yeah. New lithography systems, they sold 66. That's actually down 1 unit from Q2.
Just one, but still.
Yeah.
And used systems were down a bit more, 6 units compared to 9 in Q2.
It does suggest a bit of softness in immediate system shipments for Q3. But you have to remember, they're often running close to capacity, and the machines are getting more complex. Maybe it's more about timing and mix.
And they always have that steady stream from their existing machines,
Yeah.
right? The service revenue.
Exactly. Installed base management sales, that was 1,962 million, almost 2 billion. That's consistent income from maintenance, upgrades, support. It provides a really nice cushion.
Okay, so Q3 shipments, maybe a little muted, but the future demand signal,
Mm-hmm.
that's a completely different story.
Yeah.
The bookings number.
Oh, absolutely. This is where you see the confidence. Net bookings for the quarter were 5.4 billion. That's 5,399 million in new orders secured for the future.
And the crucial detail within that 5.4 billion. This is the real eye-opener for me.
It's the EUV number. A massive 3.6 billion of those bookings were specifically for their extreme ultraviolet systems.
Right. And for you listening, EUV is the absolute top-tier technology needed for the most advanced chips. So 3.6 billion in new EUV orders.
It just shows the industry is doubling down. They're committing huge amounts of capital to the leading edge, and ASML is the only game in town for EUV. It locks in their dominance for years to come, really.
Which flows right into the tech momentum they talk about. CEO mentioned lithography intensity, basically needing more complex steps, is picking up steam. EUV adoption is gaining momentum.
And they're pushing forward. They confirmed progress on high NA EUV. That's high numerical aperture, the next generation of EUV, allowing even finer details on chips. It's critical for scaling beyond current nodes.
But it wasn't just about refining their core tech. They made a specific, interesting move into a related area. Advanced packaging.
Yeah, that's a hot area. Stacking chips, connecting them in new ways. ASML is bringing out a dedicated tool for this, the TwinScan XT.260. It's an eyeline scanner, but optimized for these packaging applications.
And the claim is pretty bold, up to 4 times the productivity compared to what's already out there for these tasks.
If they can deliver that, it's a significant move. It expands their market, takes a piece of a different part of the manufacturing process. Very strategic.
And underpinning all this hardware, AI. They announced a partnership with Mistral AI.
Right, and this isn't just marketing fluff, it sounds like. The goal is specific. Embed AI to boost system performance, productivity, and crucially, customer process yield.
Helping customers get more good chips off each wafer using AI. That's incredibly valuable.
Definitely. And they connect this directly to the market buzz around AI investments globally. That's driving demand not just for the absolute cutting-edge logic chips, but also for advanced DRAM, which benefits their tool sales across the board.
Okay, so that tech story, EUV, strength, high NA progress, new markets like packaging, AI integration, that really sets the stage for their forward outlook, which sounds, well, pretty strong.
Very strong, especially for Q4 2025. They're guiding for total net sales between 9.2 billion and 9.8 billion.
Whoa, hold on. That's a massive jump from the 7.5 billion in Q3. How do they expect such a huge sequential increase in just one quarter?
Good question. It often comes down to revenue recognition timing for these huge, expensive systems, particularly EUV. They might build them, have them ready, but only recognize the revenue when the customer formally accepts it after installation and qualification.
Ah, okay, so that big Q4 number probably implies several high-value systems hitting the books then.
That's the likely explanation. And they're continuing to invest heavily to support this growth. Q4 R&D costs are expected around 1.2 billion. That's a huge sustained investment.
So putting it all together for the full year 2025, they're expecting total net sales growth of around 15% compared to 2024.
Yeah, and that gross margin holding steady around 52%, a very solid year overall based on these projections.
Now, things get maybe a bit more complex looking further out into 2026. There's a key forecast, but also a significant caveat.
Right. The top-level statement for 2026 is quite bullish, actually. They state they do not expect 2026 total net sales to be below 2025.
Okay, so maintaining that high level achieved in 2025 is still a strong statement. But there's a major piece moving under the surface, isn't there, regarding China?
There is. And we need to be clear, we're reporting what ASML management has stated here. They explicitly said they expect China customer demand and their sales to China to decline significantly in 2026.
Significantly decline after seeing very strong business there in 2024 and 2025.
Exactly. This is them acknowledging the impact of the current geopolitical and regulatory environment on that specific market segment for their business going forward into 2026.
That's fascinating. They're basically signaling, we anticipate losing a big chunk of business from a major region, but we believe the global demand for our most advanced tech elsewhere will be strong enough to compensate, keeping our total sales flat or even growing.
That's the implication. It speaks volumes about the perceived demand from, leading-edge logic and memory makers in other parts of the world, likely driven by things like AI, infrastructure build-outs, and continued device scaling. It highlights the indispensability of their core EUV and upcoming high-NA technology.
Incredible resilience baked into that forecast,
Yeah.
even with that specific headwind. Okay, let's shift to how they're using their cash. Shareholder returns.
Standard stuff first. They announced an interim dividend of 1.60 per share payable in November, so returning cash that way.
And the share buyback program. They have that big 2022-2025 one running.
They bought back about 148 million worth of shares in Q3. Not a huge amount for them. Under the current 12 billion program, they've now spent about 5.9 billion in total.
Okay, so roughly halfway through the announced amount.
But here's the interesting part. They signaled they don't expect to complete the full 12 billion within the original time frame.
So they're pulling back a bit on the buyback pace.
Seems like it. They do plan to announce a new buyback program in January 2026, but slowing down the current ones suggests maybe cash is being prioritized elsewhere right now.
Which leads perfectly into the balance sheet.
Yeah.
Because there was a big move in their cash position in Q3. A noticeable drop.
A very noticeable drop. End of Q3, cash and short-term investments were 5.1 billion. That's down from 7.2 billion at the end of Q2. Over 2 billion euros decrease.
Okay, where did over 2 billion go in one quarter besides operations and the modest buyback? You looked at the cash flow statement?
Yes, and one line item jumps out immediately. Purchase of equity investments.
Equity investments, like buying stakes in other companies.
Exactly. In Q3 alone, they spent 1,210 million over 1.2 billion on acquiring equity stakes.
Wow. That accounts for a huge chunk of the cash decrease. What does that signal strategically? Investing over €1 billion in external equity.
I think it signals a major move towards securing their ecosystem. This could be investing in critical suppliers, maybe materials companies, maybe partners involved in new technologies like high-NA, or even advanced packaging components.
So, locking down the supply chain. De-risking.
Precisely. Given the geopolitical uncertainties and the sheer scale of the EUV ramp they need to deliver, proactively investing to strengthen their supply chain and technology partnerships makes a lot of strategic sense. It ensures they can build and deliver these incredibly complex machines reliably. It's using capital for long-term strategic security, perhaps even above maximizing near-term buybacks.
Okay, so let's try and tie this all together. We had a Q3 that was financially stable, kind of steady as she goes on unit sales.
Right. But underneath that surface calm, massive forward momentum, huge EUV bookings, signaling long-term demand.
Then strategic expansion, the first product for advanced packaging, the AI partnership aiming for real performance gains.
Followed by a bullish outlook for Q4 and 2025, even while forecasting a significant hit from the China market specifically in 2026.
And finally, a major strategic cash deployment, over €1 billion in equity investments in Q3, likely aimed at shoring up that critical supply chain.
It really paints a picture of a company navigating short-term market conditions while making huge long-term bets on its technological dominance and securing its ability to execute on those bets. The Q3 numbers themselves almost feel secondary to these larger strategic currents.
So the final thought for you, our listener, to ponder. ASML expects to lose significant China sales in 2026, but maintain overall revenue. To make that happen, which engine needs to fire harder? Is it the acceleration of high-NA EUV adoption by the leading-edge players? Or is it the broader, perhaps more immediate demand fueled by global AI investment trickling down to logic and memory?
And maybe consider how that 1.2 billion equity investment spree in Q3 might reshape their supplier relationships and strengthen their moat over the next year or two. What capabilities are they trying to lock down? Lots to think about.
Definitely food for thought. Thanks for joining us for this deep dive into ASML's Q3.
We'll catch you on the next one.